That is a topic that I'm sure every accredited investor and every investor, every person out there probably likes to hear and maybe not always talk about, though, right?
Because, taxes is actually one of the biggest expense items that we have as Americans. So all those things really add up. And it's really important to understand that if we can control how much taxes we pay, that's really just more money that we can use to build our wealth faster. The tax law is made up of basically a bunch of incentives, right? Like, build businesses, hire people, provide housing. Then the tax law gives us incentives to do all those things through business write-offs and tax credits and things like that. So, from a planning perspective, it's a matter of looking at what is your goal with financially, and can we implement those goals in a way that maximizes the tax savings potential. I mean, real estate is one of the few asset classes where we get to not just take write-offs against our rental income, but we also get to use depreciation. So for, depreciation is always like the wonderful world when we talk about real estate tax benefit. But for anyone who doesn't know, depreciation basically is what the IRS or the tax code allows us to take a paper write-off every year on the purchase price of a specific rental building over time. So at a minimum, that's one of the things we get to do when we invest in real estate that we don't generally get to do when we invest in the stock market, right? So that's one of the benefits is, we're always looking at how can I create cash flow without paying too much in taxes? I mean, if you think about it, tax savings is really the easiest money you can make, right? We're just going to keep more of it. And that indirectly then allows us to have more freedom of time to spend on with our family or, checking out the latest hole in the wall food place.